Hey everybody, welcome to another episode of What Ted Says, where it's always time to get a fatter wallet and a bigger net worth. And you know what's interesting? Women are actually better investors than men. Now, why is that? One of the questions people ask is what lies in the superior rate of returns that women have compared to men? And actually, it lies in the way that they trade, or maybe the way that they don't. A recent study came out and it found out that the reason that women actually do better than men is in the fact that they trade less. They bought and sold less stocks over 10 years in their portfolios than men did on a trading basis, and that would produce superior returns. Now, it's interesting because of the same token, still a lot of education that needs to be done. About a third of the women out there don't say that they're very confident in investing their money altogether. So we need to continue that education. But there was also a second study that was done by professors Brad Barber and Terence O'Dean, and it did in fact prove that men trade their portfolio too much and they're more erratic in the decisions that they make when they invest their money. Now, why is that? Well, the secret sauce in the study, and it showed why men are less good at investing over time, lies in the fact that they're overconfident. And this overconfidence is triggered by a hormone. This hormone is called testosterone. Yes, testosterone, because what testosterone does is it does three things. One, it increases greed. Two, it decreases fear. But three, it stokes and presses that button of overconfidence, which makes men more erratic in their trading. It makes them trade more frequently. And look, it's like the age-old adage. You can't time the market, but often men think that they can, or they think they can beat the market when the professionals can't. This is why Warren Buffett's favorite time period for having an investment or holding period is forever. So what can we learn from this? For men out there, you can learn a very simple thing. Patience. They say patience is a virtue, but it's so important to remember that if you're going to invest money in the stock market, it really should be for 5 years. Anything less than 5 years is a huge mistake, and you can't day trade. Those kinds of things are going to give you underperformance. For women out there, it's like beyond your 401k, it's time to get the money off the sidelines and get it invested. So whatever training, education, or literacy you need to be able to do that, you actually do well with your money. And remember, the difference, which was interesting in this study, of just a 0.5% return or a 1% return over a 20 or 30 year time frame could mean hundreds of thousands of dollars in your pocket. So there it is. This is why women are better investors, and maybe you should think about trading less in your portfolio. That's this episode of What Ted Says. Thanks as always for watching this, and make sure to subscribe to the channel and get all this great information in your inbox